Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, a financial situation or needs. It should not be used, relied upon or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning, team. How are you all? Thank you for tuning in. It's Thursday, and again, back to financial planning with myself. Been in the industry for about 15 years and also part of the 6-star team at the Positive Collective. So looking forward to bring you another episode and give you some insights into, I guess, how we think, what we do, and into some conversations that we have with the clients at a high level. So I hope everyone had a good start to the week, and we're obviously over the hump now, so a few more days to go. I guess what I want to chat to you about today, team, is really about what I mentioned in my last episode last Thursday around asset allocation, and kind of dive deeper into individual sections, and starting off with the most important part, which is cash, right? So cash gives you the ability to invest, gives you the ability to provide lifestyle for yourself and your family. So let's chat about that in a little bit more detail. Sounds very simple, and it is, but it is what you do with your resources that counts. So I can see there's a few people jumping on. Good morning, Kevin. Good to see you. We've got Shell. Good morning, Shell. Thank you for jumping on. Hopefully you'll find some interesting details in this one. So let me just bring up my slides, and we can dive into that together. So as always, general disclaimer, there was one played at the start, and just again, if you need any advice, speak to your professionals. This is more for entertainment purposes, really just to get you thinking, get the conversation started, and something really to not execute just on the back of this episode. So I think that's given you enough time to read through the disclaimer. If not, let me know. Otherwise, let's push forward. So, what is cash, right? So it depends. It depends on the person that you're speaking to, right? So you've got people that are saying cash is king, and you've got other people saying that cash is trash, right? So I've got famous investor there in the slide, so you know who he is. But ultimately, the way I see cash and the way we have these conversations with the client is that, yes, cash is king as long as you use it appropriately, right? So if you sit on cash for 10 years, then, is that really a king position, or is that just a wasted opportunity? And ultimately, cash, which we'll dive into in a second, does that give you any sort of return in the back of it? Yeah, you could sit in a term deposit and get a little bit of interest. But other than that, there's no capital growth on that. So what I wanted to kind of take you back to, so several episodes ago, I chatted about Trump and his Liberation Day. So the Liberation Day announcement was really all about tariffs and what implications they had on the back of it. So ultimately, nobody knew what was going to happen. So as always, the markets overreacted, and for the right reasons as well, because there were major implications to the bottom line for a lot of companies. So the market sold off, right? So we can see that sell-off happening here. So Liberation Day happened on the 2nd of April. Then we had a relatively decent sell-off, circa sort of 10% plus minus, and that kind of stayed up and down for the next sort of week or so. Oop, my bad. So that basically gave the market time to process some of the information, which was I don't even think that's been processed entirely just yet, because there were certain things that were happening on a daily basis until there was that pause of 90 days to negotiate tariffs across different nations. So ultimately, the purpose of this chart is really to show you that, over the last 28 days, essentially, right? So from the 2nd of April to today, 28 days later, the markets are actually up slightly from where they were since that announcement, right? So in the short term, right, as I mentioned earlier, cash is king, because if you had the cash sitting on the sidelines ready to go as part of your overall asset allocation, you could have gone in around this period of straight after the announcement, a few days later, could have gone into the market and then rode the rebound from there. Of course, it's a super aggressive strategy to do that, right? So because at that point there was limited information, new information coming through daily. The process of identifying what is true, what is not true, or really taking out the noise from the market, was very difficult to do. So really, you're taking a massive gamble or risk to actually enter at that point. However, as I mentioned a couple of episodes ago, the markets, as of recently, as of the last sort of 5 years, you can see that the reaction to any news, the positive or negative, is quite rapid, right? So you've got negative news, markets sell off quite rapidly, and you've got positive news, so the markets rise back up. So ultimately, over short term, if you had that opportunity, you could have done that move. and you could have come out with a better sort of investment position. At the same time, this could have gone the opposite way too. So you could have invested at this point here, and then it could have either plateaued at the same level or even gone down a bit. So that's the sort of risk that you take, right? So I guess this is kind of going from the very defensive side of cash to super aggressive side on that asset allocation. So, well, what about long term, right? So we talked about short term. Short term is we can agree that cash is king, so it's always good to have some reserves in the background. But what about long term? And I think that this is where our friend Robert Kiyosaki is referring to, that cash is trash, in reference to that. Yes, your $100 today. If we use sort of the last 70 years as on the chart here, we can see that $100 today would ultimately buy you much less in the future. All right, so this is quite a long period here, but ultimately the area that you need to be focusing on is, if I've got my $100 today, great, but with inflation over the years, that $100 will buy me less, right? So if it's not being utilized, then really over long term, the value of that capital reduces. And we can see that in comparison to other asset classes in this space. So if I focus on cash, we'll go cash at around over say 10 years, 1.9%. Hold on a second, I've got an intruder here. So give me 1 second.
Yeah.
Do you want to go to mum?
No.
So give me 1 second. It's school pickup time. All right, 1 second. Do you want to take this to mum? Thank you.
No. I want this.
The joys of working from home. Okay, so going back to cash. So if you look at 10-year term, right? So we're looking at long term here. So cash return was about 1.9%, with CPI, which is inflation, at 2.7, right? So again, this is just sort of confirming the impact of inflation on cash, which is eroding your purchasing power. And then something that we'll come back to in the future episodes, where we'll chat about other more riskier asset classes. So obviously taking more risk, but the return on the back of those are significantly higher over a longer period of time. In the short term, again, things can be quite volatile, but in the short term, long term, they tend to be much greater. So cash, right? Again, I'm going to come back to this table over the next couple of episodes, just to sort of reinforce the position that cash, super safe, low risk, low return, but you should also look at opportunities of that cash during different market episodes. So like over the last month, there were a couple of opportunities to get into the market, but also that kind of took your low risk allocation to the very high risk tolerance. So just keep that in mind. And again, just to reconfirm, how do we see cash in this space? It is really that mechanism to deploy for the longer term, but also you always should be you should always have some cash sitting on the sideline. So super short episode today. Next week I'll cover off on fixed interest, unless there's something that comes out in the meantime. But let me know what you guys want to hear about, right? So I want to focus on the asset allocation over the next couple of weeks. But after that, if you've got any sort of specific topics that you want me to cover off in the future, let me know, and I'll make sure I'll put that into my episodes in the future. So obviously this is for you guys to learn and provide education for you. So the more interactive you are, the better these episodes will be. So just to finish up, don't forget the property summit is on mid-June, 13th to 15th of June. The link will be posted in the chat. So if you guys want to check that out, register. Heaps of value. Like I mentioned before, last year was heaps of fun. I think everyone came out with a lot of knowledge from all the special speakers, the property game that we all played, and that kind of showed everyone what that looks like. And ultimately, it's an investment into your education, and if property the thing that you love, well, you'll love this as well. So thank you guys. We might put up a video, I'm not sure, just of the last year's property summit. If not, I'll catch you guys next week. See you later.
All right, this is going to be fun. Who has played the property game before? Who has been in the game? Who's never played the property game before? Oh, you're in for a treat. Who likes Monopoly? Did anyone like Monopoly when they were a kid? Well, this is Monopoly in real life in this room. Every hour or so, you guys are going to be up and you're going to be running around the room like maniacs trying to play the property game and win the property game.
Today, I wanted to share the lessons, the mistakes, and the wins.
I want everybody to put up their hands who knows their interest rates on all their loans right now.
If you haven't seen me around before, like 13 years in the industry, in property management specifically.
Who likes paying tax? If you need help finding somewhere to donate, I'm sure I can find somewhere else where it can go.
No, we've got an expression in that, let's go and make new mistakes in the world. Who wants to make new mistakes?
These are just strategic moves that can make such a big difference.
So obviously buy well, never sell. Definitely the majority of what everyone's looking to do is collect some A-grade assets, B-grade assets, whatever it might be.
I loved the idea of being a property investor and developing that identity.
Collectively, they have way more years experience in everything that you think you're trying to solve, because they do it every single day.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.